Welcome back for another Agix price prediction analysis video, and in this video I will be giving you my breakout target areas, give you areas that Agix needs to continue holding above in the next coming hours, and also share out my long-term Elliot wave analysis that I'm expecting to play out once the bull market is here. And at the time of this recording, Agix is holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up. We are also holding above support at around the $0.25 mark, and at the time of this recording we have now seen a break above resistance at around the $0.26 mark, and there are chances that maybe in the next coming hours here on the 4-hour chart we can maybe see a retest of that key area of support, and once the retest is in, then I will be expecting Agix to continue gearing up and get above the $0.3 mark. And all this is based on the Elliot wave structures, where you can see that on the 18th of October Agix gave us a low at around the $0.15697 mark before we saw that massive breakout to the upper side, breaking above significant areas of resistances in a move that gave us a high at around the $0.26 mark, completing the formation of this Elliot wave count 1 to the upper side. And after seeing the formation of that first wave, we started a corrective structure in the formation of this wave 2 in a move that has managed to get into the minimum target areas for the second wave, highlighted on the charts using this blue target area, which is an area that I came up with using the Fibonacci's, connecting the fibs from the low of the first wave down there to the high of that wave 1, giving me a minimum retracement area between the fib level 0.382 and the fib level 0.618, and that is between the 0.22137 and the 0.19703, which is an area that we almost fully maximized. We saw a reaction of the fib level 0.5, and right now there are high chances that whatever we are seeing is the start of an impulsive move to the upper side in the formation of a larger Elliot wave count 3, and the minimum target areas for the third wave can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area at the fib ratios 1:1, and that is at around the $0.322375 mark, which is the minimum that we can expect Agix to do. And a break above that, then we can have our eyes set on the fib level 1.618, and that is at around the $0.38569 mark. That is what we can expect in case we see a break above the 0.32 and the $0.35 mark in the next coming days. And those are the breakout target areas that I'm keeping my eyes on the Agix chart, basing my analysis on the Elliot wave structures. We also need to have in mind that there are chances that we can also see a reversal from the prices that we are trading within, and in case such a movement plays out and maybe at some point we lose support at around the $0.26 mark, then expect further pullback to the area at around the $0.245 mark, where we have support, and as long as that is holding, we can expect another bounce back to the upper side. But if by any chance we lose the $0.245 mark, expect further pullback to the area at around the $0.21 mark. And jumping to the daily chart to now give you my long-term Elliot wave analysis that I'm expecting to play out once the bull market is here. Here on the daily chart you can see that back in 2022 we saw our lows down here before we saw that massive push to the upside, giving us a high above the $0.67 mark, completing the formation of this Elliot wave count 1 to the upper side. And after seeing the formation of that first wave, we started a corrective structure in the formation of this wave 2, in a move that gave us a pullback into the minimum target area for the second wave, highlighted on the charts using this blue target area, which is an area that we fully maximized, and there are high chances that in the next coming days or maybe weeks and months, we can see a reaction of these continue getting impulsive and start an impulsive wave in the formation of these three minimum target areas. Can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area at the fib level 1.618, and that is above the $1.17578 mark, which is the minimum that we can expect AGIX to do in the formation of that wave 3 before we can expect a wave 4 and then a wave 5 to the upper side. So that is what I'm keeping my eyes on the short term and also on the long term here on the AGIX chart. And I hope that video was of much help to you, and I hope to catch you in the next one.